So, Jim, let's kick it off with the idea that we're in an unprecedented bull run and we've had a lot of wealth created. What is the primary goal that your clients have with all this wealth when they come to you?
Well, let me set this up a little bit. I think with Abbot Downing, we really have three types of clients. We have what we call a multi-generational family, which is a family that is going to have its wealth for a number of generations and will be passing it along to children, grandchildren, as well as foundations and endowments. We also serve the family office market and foundations and endowments, which is an outsourced CIO model that we use. On the family office and the multi-generational families, primarily it's tax efficiency. There's been a significant amount of wealth that's been built up, as you said, over this bull market, and taxes really do matter. I think the tax bill back in 2013, as well as the most recent one, has really put a focus on making sure that the portfolio construction process includes not only risk but also tax efficiency.
Jim, your average client with $78 million, obviously they have different needs than the average trader would have, and a lot of the market jitters. How are they changing their portfolios for today's market? Is there anything they're doing? Are there any bets they're shifting to?
Well, so two things. One is we have been defensive this year, and so while October was distressing, it probably wasn't as distressing to our clients. I think one is we were probably a little better prepared, but then also is that they tend to be long-term investors. They're really looking for inefficiencies that allow them to get into stocks and get into investments at points in time when others are getting out. And that patient capital really does, it serves them well in markets such as this.
Can you tell us a little bit about how people are demanding loans? Is there any way that they're seeking to lend against their investments that they maybe haven't been in the past?
Well, yes. Particularly in the family office space, complex credit has become something that they will use, not only for businesses that they may own directly, but they also have consistently levered up portfolios. And then also is our clients do tend to be large real estate investors, and so there's a significant amount of loans and debt that basically go toward real estate investing.
Jim, a question from London. How global is the average portfolio of one of your clients?
Well, there's two parts to it. It's fairly global in the sense that we probably allocate somewhere around 15 to 20%. Now that's, if you're in London, that's probably not a significant proportion of assets to international. But in the United States, it is. And then we also have a significant portion of our assets in alternatives, and those alternative portfolios actually end up having a much more global sort of flavor to them as well.
You had mentioned that a lot of your clients are family offices. Can you tell us a little bit about how the hedge fund industry and the struggles they're seeing there is contributing to your business? Are you seeing more family offices come to you as many hedge funds start to convert?
Yeah, that's actually a very good question. I think in the last, since the financial crisis and Dodd-Frank, hedge funds have moved toward the family office space and converted to family offices. There's really no typical family office. I mean, we always say if you've seen one family office, you've seen one family office, and so it's not an easy sort of market to kind of go after because each family office has custom portfolios. They tend to be complex. They tend to use leverage differently. I think what the hedge funds have done is really they have a sort of a different flavor to them than the traditional family office that we might see coming out of a family business that had been either sold after 100 years of being in existence, and or a family business that basically is maintained, and that cash flow from that business is being used to go into capital markets or other types of alternative investments.
I just want to spend another second on the idea that these family offices are levering up a little more. What are they levering up more for? What exactly are they trying to accomplish here?
I don't know that they actually necessarily lever up more. I think that part of it too is that they always want to have essentially lines in place for if markets do turn down and they get capital calls on private investments. They want to be able to make those capital calls through use of the line, as opposed to basically selling equities in the public markets at that point in time. As all crisis basically comes down, gets more challenging if you have a lack of liquidity and then you also have leverage. And so I think they want to make sure that they've got some powder dry, that they don't have to be selling equities into a down market.
How much do geopolitical developments impact the day-to-day decisions of your clients? I'm thinking everything from Brexit to who happens to be in the administration or, in the different houses of Congress.
We watch it. It's one factor, but we really look at sort of three things as we build portfolios. One is our asset allocation strategy. Specific factors and macro factors are one part of it, but really most of our value add comes from security selection and manager selection, and that's where we really make a difference in terms of creating alpha in portfolios.